Hello everyone, welcome to the Ichimoku daily analysis for gold for Friday, June the 12th. Well, a very exciting day on the gold markets today. Very substantial sell-off and a very important sell-off. We identified yesterday that we'd actually breached the neckline of a head and shoulders pattern, and today we had a very strong close down below the head and shoulders pattern. That completes the pattern, and now we'll have a target for this pattern. We should continue to trend to the downside. The target will be gained by measuring the distance from the top of the head to the neckline and project that down from the break of the neckline. Now, the only problem is, looking at our Ichimoku charts, we have to wonder how valid that target will be when we consider that we're going to find support somewhere within this Kumo or the cloud, and most likely first at the top of the cloud. So we need to watch how this market will trade down to this region over the next day. If we see buying coming in here at the top of the cloud, we might decide that the target is a false target. Now, if we do take out the cloud, though, then it'll be natural for the market to find support within the cloud as well, or even perhaps at the bottom of the cloud. So there is a good chance, though, that we will meet that target if we do take out the top of the Kumo. Now, just looking at the candle itself, quite a change of character from the trading over the last few days. We identified during this week that we had a new first time frame uptrend from this area here, but we didn't like the small bodies on the candles. When we're in an uptrend, we want to see green candles and we want to see the body getting larger and larger and larger. And what happened in effect was that the body was getting smaller and smaller and smaller. And then when we had a change of trend to the downside, we had a doji, which is a candle with no body whatsoever, which means even more indecision than we identified over the previous trading period. And it's little wonder that this market sold off substantially. Very big body red, which means that the bears are in control of this market. There was a little bit of buying that came in down here, as evidenced by the shadow or the wick on the bottom, but not really substantial. So very bearish day. Now, looking at the indicators, though, we had the cloud twist some time ago, which means that the market is still essentially bullish. So what we have is a retracement of this very strong trend here happening here, and we have the market trading up above the cloud, which means that the market is bullish as well. Interestingly, though, the market has taken out both the Tenkan Sen and the Kijun Sen, and by taking out the Kijun Sen, that's given us a sell signal, but it's quite a weak signal. When we have a sell signal based on the Kijun Sen, the most strongest signal that we like to see is when the signal occurs below the Kumo. If the signal occurs within the Kumo, then it's a neutral signal, and if it occurs above the Kumo, then it's a fairly weak signal. So we have to pay attention to the fact that this signal occurred up here above the cloud, so it means that it's not quite as strong as if it was down below the cloud. So looking at the Tenkan Sen is now pointing down, which reflects the downside momentum that the market now has. It's the second day that we've had a lower high and a lower low, so quite bearish short term. So what we need to do over the next day or so is just look at how the market reacts here. Some of you might have placed sell stops down below the neckline. If you did, that's well and good. Now, some people might be tempted to draw a neckline through here. This part of the trading here was not a swing low. The swing low for the left shoulder was actually down here and not in this region here. So I think that's the more appropriate neckline to draw, the one that we initially drew there. So interesting trading coming up over the next few days, trading down to the Kumo, and we'll see how the market reacts.